Hello everyone, Professor Christensen here. Next up we are going to calculate the break-even point. On your screen, again, you're going to see that this slide has a star on it, meaning that it has some important information for you. These two equations are equations that you're going to have to memorize. They're equations that help us to calculate the break-even point. And remember, the break-even point tells us where does the company have exactly zero operating income. So it's no profit, no loss. Okay? Revenues are equal to expenses. All right, so here we have two different equations to calculate it. It's giving you the same thing, but it's giving you the answer in a different form. So in the first case, the break-even point in units sold, and you can remember units divide by unit, okay? To get break-even point in units, divide by contribution margin per unit. All right, so you take your total fixed expenses, this is going to be a larger number, divide by contribution margin per unit, and that tells you how many units the company has to sell to break even. Next, if you want to know break even in sales dollars, then you divide your total fixed expenses by your contribution margin ratio. Okay, and remember in the last video we saw how to calculate contribution margin per unit and contribution margin ratio. So if you need to, you can go back and review that video. All right, so now let's take a look at an exercise to practice this. Maybe if I can get this to switch over. Okay, here we go. All right, so here we have a product that I have a little bit of a mess here, but anyway, here we have a product that's where they sell for $180 per unit. Total variable costs are $135 per unit. Let me put a T here. So this says the company's annual fixed costs are $562,000, and use this information to compute the company's following information. All right, so I'm going to pause the video for a minute. And I want you to stop, and while I'm paused, I want you to stop and calculate contribution margin per unit. Let's say per unit here to make this more clear. Contribution margin per unit and contribution margin ratio, because that's what we did on the last slide. So I want to make sure that you know how to calculate both of those things, and then we're going to do break even. All right, so while I pause, go ahead and calculate contribution margin per unit and contribution margin ratio. And as always, make sure you write down the words, because remember, that's going to help you to remember the formula. So write down the words that you use to calculate each of those two. Okay. Okay, so while you were gone, I put in some words here, and hopefully you have written down the same words as you calculated the contribution margin per unit and contribution margin ratio. Okay, so contribution margin per unit is equal to the selling price per unit. So in this case, our selling price is $180, and our variable cost per unit is $135. And remember, contribution margin is selling price minus variable costs. Okay? How much money we have for each unit to cover our fixed costs and our profits. All right, our contribution margin ratio, hopefully you remembered, is equal to contribution margin per unit divided by selling price per unit. 25%. Okay, and let's turn that into a percentage. 25%. Okay, so we know our contribution margin per unit and we know our contribution margin ratio. We're going to be using those to calculate break-even point. All right, so remember, break-even point per unit is equal to total fixed expenses divided by CM per unit. Okay, so total fixed expenses in this case, they tell us, are $562,500. I'll make that, put some dollar signs in there, so we are not necessarily dollar signs, but we need some commas. Okay, so $562,500. Our contribution margin per unit is $45. Our break even in units is equal to total fixed expenses divided by contribution margin per unit, 12,500 units. So let's make a little note over here. Okay, the company breaks even when it sells 12,500 units of product. Okay. All right, now, next up is break-even point in dollars of sales. So hopefully you remember from our slide, this is equal to total fixed expenses divided by the contribution margin ratio. And that gives us break-even in sales dollars. Okay, so our total fixed expenses, remember, were equal to 562.5. Our contribution margin ratio is 25%. Again, we're going to divide, so this is going to be equal to 562.5 divided by 25%. All right, so that means the company breaks even when its sales are $2,250,000. All right. Okay. Now, remember that these two numbers are really the same. All right. So I'm going to put a little note in here. I'll put it in red. So this is really the same thing. So we're saying that we break even when we sell 12,500 units of product, or, oops, I missed a zero here, or when we sell $2,250,000 worth of product. Well, how do we get our sales? How do you get your sales? Well, you get your sales. So another way of saying this is sales to break even. Another way of getting it is equal to our 12,500 units, right? Times the selling price of, let's go up here, it was $180, right? Okay, so another way to find your break-even point in sales dollars is to say it's equal to break-even in units times $180, and you get the same number. Okay, so I'm going to stop this here. We're going to come back and do some more practice and break-even soon. Okay, so hopefully you went back and reviewed what we just did with break-even point. Next up, I'm going to ask you to go to your class activities and go to activity 2, example 1, which is called calculating break-even point. Okay, looks like this. All right, and what I'm going to ask you to do, I'm going to pause the video again. I'm going to ask you to do this part of it, calculate the break-even point using those formulas. So you're going to get a little practice doing what we just did. So use this information here and calculate your break-even point in units and in total sales dollars. And when we come back, I'll give you the answers. Okay, so here we go. Up on your screen, you're going to see the formula for break-even. And hopefully you got the right answers for both of these break-even questions. So the first thing we did was calculate break-even in units by taking our fixed expenses divided by our contribution margin per unit. All right, so your answer to that should be 400 units. Our fixed expenses are $80,000. Our contribution margin per unit is $200. So we need to sell 400 units to break even. Okay, if you didn't get that right, go back and double check your numbers and see which number maybe you put in that was incorrect. Okay, next up, break even in sales dollars. All right, so remember there was a shortcut, so you could have taken the break even in units and multiplied by the selling price, or you can do it this way. So we're going to take our fixed expenses, divide by your contribution margin ratio, which was given to you at 40%. And that means we have to sell $200,000 in sales in order to break even. Okay, so I'm going to stop this here. In our next video, we're going to be taking a look at the contribution margin income statement. And we're going to pull all this together in a new format of an income statement. So if you need review, feel free to go back and check out your the two exercises that we went through calculating break even. All right, see you in the next video.